What's up, guys? So today I wanted to talk about what nobody tells you about an indexed universal life and what you need to know before getting into one. The first thing is, what is an indexed universal life? So an indexed universal life policy by definition is a annually renewable term pretty much for your entire life. I think it's to 121. So the importance is, when we look at this stuff, we have to understand our risk curve for insurance is going to change as we get older, as well as how our cash value grows within that policy. So we need to understand both of those components so you can understand what is going to happen to your money and how that coverage is going to work and in what scenarios it won't work. So the first part we have to talk about is the index part. So the index part of an IUL is to look at the cap rates and the participation. You want to look and see which, with the carrier you're looking at, how are they investing that money? Are they putting it in the S&P 500, the Barclays? What are they using to get their rates that they're showing in those illustrations? Just so you can understand what that money is. And also, can you change where it is put later on? Some carriers don't allow for you to do that, while some do. So it's one thing to understand just where your money is going to be and how you're going to be able to use that. The next one you need to understand is going to be your surrender charges. So what that means is, let's say 20 years down the road, if you decide that you don't want your IUL anymore, you will just surrender the policy. So what that means is you'll withdraw the money on there. And so typically you're going to have fees associated with that and what it looks like for early withdrawal. Different carriers are going to be different in what they do with withdrawal fees and surrender charges. So you need to look into those because they don't technically have to say those in the paperwork. When you look at an illustration, you do have to especially request that stuff. So looking into what that's going to be is going to be really important for you to do. The next one is going to be looking at your premium flexibility. So one of the big selling points of an IUL is going to be the flexibility with the premium, right? You're going to have a certain fund amount, and then you're also going to have a little bit extra that you can put in. So this is a big misnomer. Well, there was been a couple lawsuits on this. So when you look at these, the premiums, while they can say they're flexible, they aren't really flexible. So the pro is, when you look at this stuff, you just need to understand whatever that premium is, look at it the same as like a term insurance, right? You're going to make that payment every single month. While it's better to be underfunded but hitting that target premium than overfunded and missing it. Because what will happen is, if you do have an event where, let's say, you want to surrender the policy, the insurance carrier, what they can do, they can ask for those funds to be paid up. This has been seen, I think it's Pacific Life, they had a lawsuit on that, and the person actually had to end up paying the full amount of the fees of the premiums that they owed. So the premiums are technically flexible, but you shouldn't look at them as being a flexible premium. The next one you're going to need to look at, especially if you're looking to try and do a tax-free retirement, is look and see how those loans are structured when you take them. So when you get 65, let's say you want to use your IUL in order to retire, you do have to understand how those loans work. Typically those loans are going to be simple interest, but as you continue to take out more in your tax-free retirement, that loan balance is going to get larger, as well as your cost of insurance. So you do have to be aware of that. The money's not technically free. It's tax-free, but there is interest involved with that loan. So as long as you have enough cash value in there, you should be fine. But you should understand that prior to going in, just so you can make sure that your money's protected at all times. So the final one is going to be, I've said it a couple times, it's the fees that are associated with that policy. So the thing about an IUL, since it's an annually renewable term by definition, what ends up happening is every single year you're going to have an increase in that cost of insurance. So as you get older, that is going to continue to go up. That's why I particularly don't advise this for older people, just because even if you could get it, your cost of insurance is going to go up too much for your cash value to actually keep up with it. So when you look at this stuff, the cost of insurance, as it continues to go up, you just need to understand that you have to have enough cash value and be funded enough in that policy in order for you to overcome what those fees are going to be and how they're going to be associated with it. So, when we look at these, the things you need to look for with an IUL is going to be, one, know what the fees are looking like, know what loans, know that flexible premiums aren't exactly as flexible as most people will say it is. And then know your surrender charges if it isn't a product that you want, but you do need to understand the surrender charges that go with it. And then also understand where your money is being invested, right? The insurance carrier can tell you one thing, but they do have to define where that is. So know if it's S&P, Barclays, or however you want, or if you can change it later down the road. Some carriers let you do that, while some don't. Some final thoughts about considering an IUL. The big thing to understand is most people are going to tell you a absolutely guaranteed 100% thing with an IUL. It's not actually guaranteed. So I highly advise you to meet with somebody who will show you the ugly too with these types of products. They can be great products, they can have their place, but they aren't exactly for everybody. So if it is something that you do want to look at, I would advise meeting with someone who actually will show you all the stuff that actually goes with an IUL and not just all the up and up, because you do need to understand how these products work just so your money's protected, because if it's set up wrong, it can become detrimental. That's all for this week, guys. Let me know in the comments if you have any questions about an IUL or if you have any recommendations for the next video. Thanks. Peace.